Going on, traders? Welcome to the channel. I'm John. That's Groot. We trade options here. So just wanted to cover quickly today important thing, which is going to be the efficiency of options and why they're really powerful. So it's actually going to be a real-time trade. We're looking at Amazon. And as most people know, Amazon's really expensive. It's a big high price stock at like 32.76. So if you want to own one share of Amazon, you're basically going to hold up $3,300 of your capital, which is pretty not efficient, basically. And it doesn't mean like don't own Amazon or anything along those lines. But for me, I like the efficiency of options. Yes, there's leverage. Yes, there can be risk, but I can control 100 shares at a very low cost of capital. And I'll explain that in a minute. But let's talk about Amazon and the reason why I like the trade. So you're already seeing an important setup here, which is a trend line, and anyone who follows kind of knows I'm big on charting, technicals, and trend lines. I do like the fundamentals, but only on stocks that I care about really, really long term. So right now, though, this is not a long-term trade. This is basically about 25, 30 days out that I'm planning. You can see this beautiful trend line upwards, which is great. You know, it's coming off basically March or so, mid-March to now. And as we kind of zoom out, I'm on the 15-minute chart. I'm going to go out to say 4 hours for now. You can see a big, basically all year now, since last year actually too. I think it was in the summer. So we've been a year of just sitting in this trading range, and that's really nice. I mean, this would have been probably a good area to buy low risk when we tested support again, but the market was shaky. It was kind of, there was a lot going on, and I was watching this, but did not make a move, you know, just in case. So that was fine. But now I like the low risk setup here. Yes, we are in the middle of a trading range. Yes, there is some possibility to go down, but since we have an uptrend and this trend line also on the short term that is up in an uptrend as support, you know, that's nice. That is something that I can work with from a risk reward standpoint. Now, here's the funny thing. Today has been probably one of the lighter days. You can see the bar is tightening up significantly. So this really does constitute the fact that we probably need to move somewhere, either up or down. And one thing I like is that just yesterday or 2 days ago, basically this week, there was an announcement that Amazon is going to buy MGM, and then there's a lot of assets there, but they're basically pushing their value to consumers. So let's set up this trade here and dive in. Okay, so I'm in Tastyworks. We have AMZN, and I'm gonna set up this trade here. I'm looking at 23 days out actually, so June 18th, that's the monthly expiration. Puts are on the right, calls are on the left. Right now, I am looking at a couple things. I had considered the idea of a call debit spread. It's a bullish play, but not great. You can see I'd put up, you know, if I do a spread here of say $1,000 or like a 10-point spread, I'd put up $500 for only the potential profit of about 485. So that's not a very good risk reward. Generally, I like it when we're above one, like almost 2 to 1 in terms of reward to the risk involved. So if this was more like, you know, 8 or 900 or 1,000, then I'd be okay with that. It's a good setup. But when we're working with different risk rewards that aren't great on the debit side, I don't really want to pay for that. I'd rather get paid to take on an income trade. So based on this, I'm going to go on the put side. I'm going to do a put credit spread. And let's look at this. I'm going to go to, say, the 30 delta for now. So this is 3180. And I'll spread this 5 wide for now, just so you can see kind of the basics here. But in essence, I'm going to control 100 shares of this stock. It is defined in some ways. I'm risk defined on my max loss and my max profit. But basically, the only amount of money and capital I'm using is $372, not $3,700 or anything like that, or $3,300 for just one measly share. I'm controlling 100 shares, and I'm just using almost less than $400 to do that. And that's really nice. This is a really good risk reward setup here, especially for 20 some odd days out. If I spread this out to about $1,000 there, or like a 10 wide spread, this does up the amount of buying power that I put up for collateral. And that's going to be $748 in this case. And in terms of my reward, I take in $253 of premium, 250 right now it's showing. So that would be like 250, and say I'm maxing out or I'm risking about 750, and that still puts me at a pretty good risk to reward as well. A couple differences that you'd see as you're kind of considering these choices is you want to look at your theta draw. And so at the 10 wide, this would be about $2.50 each day. And I know that doesn't seem like much, but really every day we stay above these strikes, this theta draw picks up significantly. So anyone who's interested in theta gang, that's kind of like the thing. It's just some people don't understand that concept. It's a really important concept to grasp. Now, as we go here, you can see my theta draw is in half now, but my risk is definitely about half as well. So it really just depends. I'd say go off of the buying power that you're interested in, you know, whatever you've got going on there. And what I'm going to do now is go out of here. I'm going to try and make this trade. I'm going to open up at the 3180, 3175 strikes. Let's see if I get a fill at any point in time. Okay, great. So got a fill. Boom. And let's just go back to that and I'll kind of show you where we're at. Okay, so Amazon, bam. Amazon, you are here. So this is the setup trade. I took in $126 of premium. Right now it is saying that it's marked at 130, so it's showing a small loss, but again, not too big a deal. I'm okay with this trade. It is remotely safe and I have some ways to defend that trade if I have to. But I felt that maybe I'd keep my risk a little bit lower than usual since I'm very staged to the upside in my trades. And anyone who's been following some of the others, Tesla looking good. I was down a lot before, and the fact that, like we said, we have a lot of time, we're letting the probabilities play out in our favor, which they were set up well. It's like a 70% chance of success. And so far, we are well above the strikes here with Tesla trading at 622.22. And 600, 580 are like the key levels we're watching. Right now it says minus 61, but that's just because the volatility is kind of picked up in Tesla. You know, Elon tweeting basically has improved the amount of craziness going on, which is good and bad. I could always ladder into this more and kind of average in with that extra volatility, but I'm going to wait. If there's another like down day and maybe there's some big news, but it's immaterial, then I will certainly add to this and go from there. Otherwise, everything else looks good to me. The income's coming in well. OIH looks good. Target is doing well. I think I'm like 1 or 2 days in trade on that. And what else? AMC. There we go. I'm looking to probably close this out today or tomorrow, but for now, I'm going to head out for the rest of the day. I'll try and get this posted a little later, and I will see you on the next one. Check this one out if you want to learn a little more about the trade setups.